The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 6th day of May. My pleasure to be here Monday through Friday in the Tiger Technicians Hour. And what's really important about today is that we really start the May month candle. Of course, we started it last week, but this is the week that kind of confirms it. This is the week that confirms the weekly candle in the Dow and the S&P. This is quite a critical moment, because we've started leg B up in the E-mini, we've started leg C up in the daily chart, we've started in the 120-minute chart leg C, and very good action that we're looking at right now. What's very interesting is that I spent quite some time over the weekend. Actually, I spent a lot of time on the weekend looking at the charts. I wasn't able to do, I still sent out to my subscribers, to my opening call, a lot of charts by Sunday afternoon, Sunday evening, but I had a guest chair and he was totally involved in, he's volunteered for one of the political parties, and he was I was fascinated because he was going through charts. I was looking at the telephone lines going to the different exchanges for this particular candidate. I learned a lot about the candidate, a little bit too much about the candidate. However, it was really fascinating, but it didn't give me enough chance to actually send out as many charts as I wanted to. I did look at them. I didn't have a chance to type it up and all. But most importantly, I don't think we would have actually gotten some of the bull moves that I was looking at, because some of them have just gapped up. We've got agricultural area gapping up. We've got some of the areas that were kind of dormant last week suddenly coming alive. This is a very interesting phase, because on Friday, with that terrible jobs report, now these things get modified, etc., but it was a terrible jobs report. The market dropped very sharply, and then it came back, but it didn't come back to a plus. That Dow, that is, didn't come back to a plus. And the way I thought that it would be is that there'd be some kind of a little bit of a consolidation today. It wasn't going to be deep, it was a consolidation, and then there'd be some upside action. Instead, there was the future started to gain momentum early this morning, as you can see here, right there. At 8 o'clock, by 8 o'clock, you already started to break out from the 9-period exponential moving average. So as I say, we're in leg C in the 120. Now let me move this away so we can start our little diagnosis of what's going on and analysis in terms of the different indices. The beginning of the week, let's go. You've got the INDU, which is the Dow trading up 117 at 17,924. Very important, because what has it done? It's got a leg D to the upside, which means that you've fulfilled the Chapman wave obligation of going from a most identifiable low bar. I can put the up arrow there. And most importantly, you've gone to the D. At D, other things can happen, but what is most important is that the high that was made on the 10th of May at 17,934 is really the target that we need to look at, because it's just 5-6 points away at 17,927. And the MACD is very good. The stochastic is terrific at 86% in the daily. The weekly chart is making that M formation in the MACD, which is good. And the stochastic's only at 78%, but price is running above the 9 EMA, which has support at 17,717. The daily has support at 17,803. That W formation is still active, and the monthly chart, the reason why I wanted to discuss the monthly chart is if this week there is a nominal new high above 18,167, a new recovery high, not the all-time high, but a recovery high, that is really going to be fabulous action, because it's suggesting now you've got a gray leg C. And just as that was gray and now becomes blue in the daily because you fulfill the buy mode going to a D, so we're looking at what happens here. Now, if I look at the Chapman wave projections to the upside, the Dow, let me just do the Dow first, INDU. has resistance at 17,895. Well, we're above that. The next resistance on the daily is 18,217, and then 18,319. But in the daily, why is it taking its time? Then let me just do this, Control R. See if we can get that to update. Well, one of them is updated. 17,920 has been pierced, but that is resistance in the 10-minute chart, but the 120-minute chart has a lot at 17,887. So if that's the case, so that has two at 17,889 and one at 17,887, and tremendous support at 17,693 and 17,668. So that's the 120-minute chart showing that we're getting closer to a breakout. This is still the bar, so we've got to wait for the bar to conclude. So that's very positive. Now, when I'm looking at this, I also want to say that within the context of this monthly candle, the reason why it would be very positive if there was, doesn't have to close, it just needs to break above 18,167, is that all of a sudden that 18,351 becomes a magnet. So I like this, and as I said to subscribers over the weekend, the bias is that all except the 120-minute chart were positive, and we're going to go from there. S&P, SPX.X, here we go. The S&P is up 10 at 2109. Leg A, B, C, D. This is leg E. So it's a little bit more extended. Is it going to make an instant restart? I don't know. But so far, the technicals are really good, and it's in leg E. So it's a little bit more extended. This is going to be fascinating because the Dow is only going to leg D now, and this is already in leg E. So that's positive. But what's really interesting is that 211.05 is the number to break, and today's high is 210.25. So it's getting closer to a leg C in the weekly chart. Most importantly, let me just go to the IWM. The IWM is in, what is UWM? ProShares Ultra Russell 2000. Oh, I must remember that. IWM is the Russell 2000. It's in leg B to the upside, F/B to the upside. I'm going to call it F/B because of the others. And it's still acting very well. Leg C in the weekly, leg A in the monthly, gray A, remember, I have to make that gray because it's under the previous high. Okay, so now what's really important is that what is this? Let me just go to that and see if I'm not overlapping. I am, no, I'm not. Let's go, close. That should work. Okay, so the IWM right now is at 116.73, up 76. Good action. MACD stochastic are really looking good. Let's go to the QQQ series. We haven't got a leg C. That'll start above 110.60, but it is up 49 cents at 110.55. It's not acting all that great. That's because the IBB is now up 253, but it wasn't acting great earlier on. So maybe it's going to have a late start. Let's go to the gold. Gold right now is GC is up 6 at 12.49. Nice move. A big snap on Friday. Boom, right through resistance. Now it's gone above that support line, that red support line. That's going to be good. Let's see how it closes. And the weekly chart says, yep, very good bounce, but it could still chop around for a little bit longer. And let me just do this as we're about to go to a break. The TLT, that's the bonds. Oh, missed it. All right. The TLT is down 72 cents at 132.53. I'll be back. Basil Chapman, Tiger Technicians out. We'll talk oil and some other things on the VIX index when we get back, and we'll look at the questions that I was asked to look at.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just got an email asking me about Yelp. Yelp. How many people use Yelp? I look at it occasionally, but I'm just looking at it as more. Where is such and such a place? It's just one of those things. So, okay, we're looking at Yelp, Y-E-L-P. It's trading at 27.06. It's, let me see, it's up 46 cents. And most importantly, what I'm looking at in terms of Yelp is that it's got an inside buy mode. Let me just explain that, a little technicals here on the Chapman Wave methodology. So what it did is it had a fabulous move from the low that was made back in February, and that was what, February the 7th or something? February the 11th. And it goes peak A, peak B, peak C. Remember, we're looking for Ds from the most identifiable low bar all the way to the fourth highest peak, and then other things can happen. Well, this happened at C. And it pulls back, it pulls back, pulls back. And this is what I call the potential for a Chapman wave overlapping wave. That is really an important technique. And what happens is that underneath it, you start like another buy signal. I should have put that up arrow. I should have put a plus sign like that. And then what happens is you get a peak A and a peak B, a peak C. What would happen if you went above, not you, the price, went above 22.47, the high of the 4th of March in Yelp? In leg D, it would be an overlapping wave, and it would be a powerful wave saying it's going to go much higher, and then it's going to come back and retest the lip, which would be that 22.47 high. Well, what happened was, instead it made a gray peak A, gray peak B, gray peak C, and then it goes to a D. And that D holds beautifully with the stochastic and the MACD, holds the 9-period exponential moving average, moves a little higher. There could be a gray A, then an E/B, and an F/C. Except that that spike was very positive. The stochastic pulled back under 80%, and then it started a brand new A, B, C, and now it's in leg D. And that's exactly what we expect. And what the first thing I would have grabbed is on the pullback, especially if it's like a single line pullback, I just make a rectangle. If you watch me long enough, you see that I always do this. I grab like the flagpole going to that peak in D, E, or F. In this case, it's an F above the 200-period moving average, that orange line. And then it pulls back, and within it, you should get a brand new A. I did this a little too quickly. I did it during the break, so I I didn't do it. There. That's exactly what I'll be looking at. A sudden spike to an A, a pullback. That pullback holds the 9-period moving average, and the next thing you know, you've got yourself a move that starts a brand new peak A, B, C, and it goes to a D. All right, now that's out the way. In fact, what I can even do is make it a little, refine it even more, and say 25.52, 25.50. That means that even could be the A, B, C, and it goes to a D again. All right. So now we're in the process of looking at what happens if it goes to a D, especially in the rectangle formation. In the Chapman wave methodology, when you make that flagpole and then you pull back, and usually I say that within a smaller context, you should have an A, peak B, peak C, peak D, especially if the gap doesn't get filled. Well, the gap that was made on the 6th with a low of 23.66 never got filled because the low was 23.92. That's very important. So it goes peak A, B, C, D, E, F, A, B, C, D, E, double E, and then F. So now it's in leg F, and it says, hey, there's a real good chance that Yelp could start a little bit of a pullback here. So if you are long, and as one of my subscribers, if you're long, I would say stay long with your core position. If you're thinking of a trade, this is kind of where you want to raise your stop. 27.10, I'd raise it to 26.20, give it a little bit of room. But to tell you the truth, it looks really good. It looks like it wants to go to leg C in the weekly chart. And that would say to me, keep your core position, take a little bit of your trading position. You can take it off right now because it's a nice gain you've got, or you could wait until it goes past 27.44, the high of the 9th. And then you could raise your stop and make it fairly tight and say, hey, I don't mind getting stopped out of here. And then I'll prepare to put that back because so far everything is looking very good. The MACD and stochastic in the weekly chart says I have no choice right now but to put an up arrow. Even though it could fail, it's got all the ingredients that are required in the Chapman wave to give it an up arrow sign. So I hope that helps you. And the other question I had was, what about FEYE? Well, FireEye Inc. is a stock we've looked at for a long time. I was thinking of buying it down in the 13 area, and for some reason it just kind of went off my radar. Someone had mentioned it, I thought, oh, it does look good, and then I went off my radar again. It's looking really nice, and it's gone to a leg E, and it says also that if you're in it in a core position, I suspect you are from the way you asked the question. I should have said if you aren't in Yelp, in this particular instance, you actually have to wait. I'm sorry, it's the one idea that I didn't remember to do at all. Is if you aren't in Yelp, then you really do have to wait. What I would do is if it pulls back from 27.06 to the 26.50, 26.20 area, I would start a position. That's what I would do. I wouldn't go whole hog into this, just start a position. And that says it still might be a little bit early. It might need a day or two or three to start to consolidate. And if it does, the 24.70s and the 9-period moving average in the weekly is very strong. So the next question was if FEYE. I'm looking at FireEye, and I love the action, but I'm a little concerned that this lowercase h in the weekly chart can go to a W. So yes, going from 70 to 19.7, from 17.16 to 19.70 or so, even 20, which is what my eye says it could do, is a real nice percentage gain. But all I'm going to say is if you aren't in this is a little different. I would definitely say I would not jump in this move up. I have to wait for a pullback, even though the daily technicals are fabulous. The weekly technicals are not, and the monthly technicals are terrible. So this could be just an isolated rally with a trend that's going on in the area. And I think you could probably put in cyber as well in that category. That's a different kettle of fish. Look, the weekly's already proved itself by making higher highs and higher lows. It's above the 200-period moving average. You can call this an inverted head and shoulders. It's a little bit different. Monthly chart is also, it's better, but it's still a little bit tentative because it's just begun the new month and it's just above the 9 EMA. But the weekly chart says in CyberArk software, it's this peak A, B, C, D, E. Starts again. It goes A, B, C, and it's in D, E. It's in E. See, a lot of these stocks, as I'm looking at them, are looking a little bit toppy. But when you're coming off pretty serious lows, you can just recycle by going sideways very briefly and then move higher. So that's all I'm saying, that if you aren't in cyber, well, the question was cyber. Cyber's looking very, very good. And it's a little different. It's, in fact, it looks more positive than FireEye. I think they're in the same area. FireEye, I used to have it all written down. I don't have it written down anymore, but I think they're in the same area of security. Hope that helps you. And so let's go on. Another question was SSL. SSL? SSL. Oh, Sasol. It sounded so familiar. Sasol, when I was growing up in South Africa, Sasol was the big oil company. And I think now it's an international company. I think they were taken over by a French company. I'm not sure. But yeah, look at that gap down. Whoa, what do you want to know about it? Let me just see. All right, during the break, I'll see what the question is, because this is not good. That's a gap down of 10%, down 3.3p at 28.88. SSL, I'll be back. And we're talking about Sasol. Dow's up 115, S&P's up 10.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so I'm looking at the monthly chart of Sasol, SSL symbol. I don't know why it gapped down. So I guess the question is this gap down a buying opportunity? And all I can say is based on the chart formation, let me just go put this down arrow so we've got a nice clear picture of Sasol. It's changed the weekly. If you asked me on Friday, I would have said, oh, it looks like it wants to go to a leg D. And it made a peak, I think it was a C or a D in the daily. Let me just double check. Always have to pull it back enough so that you can see where the most identifiable low bar is. Yeah, that's part of that sequence there. So this is part of this sequence here. And it went to A, B, C minus. You know what? I'm going to pass on SSL. I see nothing here that says that I want to take a gamble that's, unless maybe it's a dividend. I don't know what it is. Maybe this is the answer. Is this an answer or is this a question? OPEC thinks could see 60 possible. Oh, you're talking about OPEC. Yeah, all right, first of all, I don't like gaps like this to the downside. This is not one of those overnight gaps that is just because the oil was higher or lower, and that's what you get when you got overseas stocks, based stocks. This is different. This says that there's something going on. It says that I can click on here and I can go to news. Let's see the news. I think I want to know what the news is. This is a case where Cecil preliminary findings of the Lake C or something or other, and Cecil Limited trading statement for financials. This could be the financials, Johannesburg. You remember. So is it still a South African company? I guess so. In March 2016, Cecil announced that it would be undertaking a detailed review of the Lake Charles Chemicals Project, LCCP, after deciding to pace the execution of the project to support the company's low oil price response plan. At that time, there were early indications that the overall end-of-job cost was under pressure, and since the project engineering was at an advanced stage, sufficient information was available to proceed with a detailed project review. The LCCP consists of a world-scale 1.5 million ton per year ethane cracker and 6 downstream chemical projects, 2 large polymer plants, low-density and linear low-density polyethylene, and ethylene oxide ethylene glycol plant, which together will consume around the 2/3 of the ethylene products by the cracker in the 3 small diameter. My eyes are glazing over. What is it? What is the conclusion? A preliminary finding from the ongoing detailed LCCP review is that the expected total capital expenditure for the project could increase up to $11 billion, including. So, all right, that's it. So I'm going to say, let's let that news sink in. Let's see what happens. It was looking very good for a short intermediate term play. At this point, I'm going to say to you, you could take a chance if you were prepared to hold and say that it might come back down. I suspect that whatever it is, it will try to come back to the price of 28.70, even if it dips to the 26s. But my fear here is that this is something that is, we don't even know all the news, and there's worse to come. That's number one. Number two is, if you were to do it, take a chance, Adam, I would do it with a call. Why not? If you're involved in options at all, or you can give a call to the show coming up, Think or Swim. This is the swimming lessons about options. Just call in and say, hey, if I'm interested, what should I do in the way of options? And I suspect that you could go out July, you could go into August 30. August 30. Call. If you can get it at 50 to, no, not even 50, that's way too much. If you can get it at 22 cents to 18 cents, I think you got yourself a nice play here. It's a gamble, but there's a nice reflex response. You can get it to 30.70 and make you some money. Hope that helps you. All right, we got Mark in Denver. Mark, how are you?
Good, Basil. How are you today?
I'm well, thank you. Well, I am well, but I'm upset. Because something's...
I can understand.
Yeah, something's just gapped up, right, that we wanted. All right, yeah. So you're looking at...
So what are your thoughts still on the XLF based on what's going on with the Fed and how big of a down move it had? And then it recovered, and it's made a D in the daily, and I'm just trying to think of
it's made an E in the daily. Under my analysis, it's you could call it a D, yeah, but actually technically it's an E, but it's got the same topping wave count, and it did pull back very sharply, folks. XLF is the S&P Select Financial Spider Fund. It hit a 23.93 high on the 31st of May. Had a little bit of a dip. It went down to 23.26, still in the 23s. No big deal there. We are long a position, and I'm suspecting that the reaction at the end of the day Friday, I thought was very good, very positive, and I love the action today. And my suspicion is this, that the XLF is in play for other reasons. I was thinking it was a play because the consensus, I just went with the consensus because I don't really see a history exactly the way people are seeing it, that when interest rates go higher, the financials go high, because we really have had a 31-year bear market in the rates. So I don't quite get that, but I do see strength, and I'd spoken about it 2 weeks ago. JP Morgan, some of the stocks within the XLF are acting very well. I like it. I think that we're going to go to a leg C. Maybe it's not this week, but I think we will go above 23.93, the high of last week in the XLF. And my thinking here is that if you look at very critically, if you look at the monthly chart, the monthly chart says that there is resistance coming up, and it'll come up in this month, the month of June, and it's not too far away. It's in the 24 area. So I'm going to say to you, Mark, if the XLF is able to get to 24.20 to 24.35 this week or next week, early next week, I think it's going to be telling us that it's not only broken the weekly down Chapman wave inside track resistance, but is on its way to the 24.89 high that would give you a left side, right side price time match by the week of the 15th of July. It sounds like, oh my God, you've only got a point and 1.25 points to go, less even. Why would it take that long? This has just been one of those very stealth moves that's held the 9-period moving average in the weekly chart, regardless of what's been thrown at it, and it's held the up channel line. So all I can say is if it takes out the high, if it takes it out this week, it's even better because it's leg C. But if it takes out next week, there will be leg D. But that green, I'm showing it right now, that this is the weekly chart, this dashed green line here is it's almost like those bus, the electric buses that have that overhead wire. It's the guide wire right there, and it keeps climbing along that guide wire. I like it. All I can say is if you were asking me today and the XLF was trading at 23.50 instead of 23.71, I'd say, wow, it's really struggling. But even intraday, I don't care where it closes, even intraday, having moved up to the 23.72 level, I think it's just telling me that fund managers are rotating through different sectors. And this is a sector that some have their eye on, because I see volume coming in on the dips. That's what I want to see. And then it comes and holds through the close. I like it. I don't know what you feel, but that's my impression.
I'm hanging on right now. So
okay.
Thank you. And then if you have any time to look at sorry.
Yep. Actually, hold on. You can finish your question when we get back. We've got Mark from Canada. We'll be right back. Basil Chapman does up 110.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Got a bunch of questions that I also want to talk about wheat, because I think it's really critical right at this moment about looking at these different commodities. Had a couple of really good comments and questions in my email, but I do want to finish with Mark, because I didn't want to go off without saying to him, I'm sorry, Mark, what I wanted to add was this. Today, I got a little bit bamboozled over the weekend. Started the whole of Friday evening, going to Saturday, going to Sunday. I have specific, no matter where I am in the world, I always make time at the end of the day on Friday and certainly Saturday morning to start preparing, getting everything ready. Everything, because my friend Bobby, it's just he's just a brilliant person. I love to hear what he has to say. And I was totally involved with looking at what he was looking at and all that. And he was involved with counting calls and making calls. And he was helping people with problems and making the calls to the candidate, etc. And I'm looking and I'm saying, wow, look at this. I'd like to, I was learning a lot. So XLF, I remember on Friday, there were 2 things. Potash was the one and XLF. And I said, no matter what happens on Monday, I'm going to grab those 2 stocks and the one that we missed, the steel stock. And I even wrote it down, even showed some of the charts. And then because I was kind of out of sync with what I was really wanting to do, I completely forgot. But I was going to grab a second position and get it back again, that second position in the XLF, because I do believe that it's going to go higher. I think in the rotational aspect, this is part of what is working right now, and we saw the evidence at the close Friday. So that's what I wanted to add. I hope that helps you a little bit.
Yeah, it does. Thank you very much. And if you have time,
I wanted to mention that only for conviction. That's all. Thank you.
I appreciate it. Thank you.
Okay. Good.
Bye-bye.
So that was Mark in Denver, and I wanted to finish that off in the XLF because I think that we're identifying here something that is working. It'll fail if the XLF, and that would have been the clue today, if the XLF wasn't up 21 cents, but in fact was down from Friday's close, even just 21 cents, it would have said, uh-oh, not good at all. So this is nice action, and it says there's a good chance that there are enough financials like a Visa. I don't want to get, let me move away from that right now because I had so many questions. And I want to get to this next question very quickly because as part of what I was looking at, another thing that I wanted to discuss in relation to a particular ETN that we wanted to get in my opening call. We used to have it. We got out because I thought gold was going to pull back sharply, which it did. But I thought it would also impact the other areas like the crude oil, not much, but enough to pull that particular ETN fund down, as well as the commodities. The commodities just ran to the upside. Now I think that they're going to pulling back. I might be wrong. And if you've got a trade on, you do your own homework because you're the one with the trade. You got in the trade. I did not trade the commodities. So I might buy an ETN or something that has to do with commodities. Okay, so the 120-minute chart, the question is, could it be a recycle to a new leg B? I think this is an F by everything I'm looking at in the stochastic and the MACD. That's the 120-minute chart. Wheat, the continuous is up 8 3/4 at 506, but it had a high today of 514 3/4. So it's pulled back quite a bit, but look at the spectacular move. 4 huge green candles. So the question was, and was just a straightforward statement by DeZuga, Basil, can you please give me your opinion on KE mini wheat? I have a short position open this morning at 482.25. Thank you. Oh, you know what? I didn't even read the whole statement. I just saw wheat and I thought, oh my God, I was looking at wheat and I thought it was going to a D. Well, it went to a D. So the weekly chart has improved a lot by that single leg spike up and pull back in leg B a few weeks ago. That, because it's such a skinny leg, says to me it's going to be a little tough to break through unless two things. At 505 right now, if on the close today, wheat is actually at 507, I'm going to say to be careful. There could be one more pop up and then it could go to C in the weekly and then it could have a timeout. Doesn't have to do that, because what I'd said is closing below the support of 502 to 500, and this is the continuous contract. I don't have your contract up, would say to me that there's a real good chance of testing the 497's 200 period exponential moving average. It turns out it's also just above the smooth moving average, which is at about 496. So this is a very key area. It starts to close under that by Wednesday. This is it for wheat on a shorter term basis. Now, I want you to look at corn, because corn had a slightly different pattern. Yep, there it is. It's gone to, I'm calling this F for now, but in fact, it could even be a D, but it doesn't matter. I'm calling it F. I'm thinking that this is a little stronger than, excuse me, wheat is a little weaker than corn right in this very moment. Corn weekly chart is very strong. It's a different kettle of fish. The arrow, I would say, if you were long, I'd say try to keep long, but I would definitely look to see that if there was a break underneath 418, it's a 424.5. There's a break under a close under 418. Be careful, it could go very quickly to the 411 support area and the 9-period moving average. So I hope that I just wanted to cover that because it's part of what I've been looking at. Just quickly go to gold. Remember gold, nice leg B, holding it up $5.80 at 12.48. I think gold is back in play, but I'm also thinking that this is going to be a move that chops around a lot as the gold stocks start to sort out which are the very best and which are the ones that aren't going to work. And that's the way I think this is. That gold is now trading at 12.48, between 12.34 to 12.30 support, and 12.58 to 12.62 will be strong resistance. And it could bounce around there for a little while. It's made its bottom for now, but I want to see if it doesn't make an H pattern, which often happens in a weekly chart like this. Okay, now let's go to crude oil, because that's part of the questions that I had. Crude oil is under the peak F top in the Chapman wave that was made on the 26th of May at 50.21. Now it's at 49.70. This is a nice snapback move. And you remember what I said? I would not be shorting crude oil. I'm not that sure I'd actually be buying it if I wasn't in it already, but I think it's going to chop around and it should make a leg D. And my thinking was that the high was between 50.80 and 51.25, somewhere around there for this particular, maybe this week. And the low will be tremendous support between 48.20 and 47.80. I think it's going to chop around there. We'll see. I got a lot done there. So Julie says crude oil and high grade. Let's see, crude oil. Well, I just did crude oil. You want to look at HG. HG is, let me just go HG. Oh, that's a continuous copper. Oh, of course I know what HG is. Copper. Copper is acting quite nicely. It's making that H pattern potentially in the daily. The weekly chart has already made the H pattern, but it had a nice right side holding above the previous low of importance. That was the low of the 12th week of the 12th of Feb at 2.008, and now it's at 2.12. But I just don't think it's going anywhere right now. Not until copper can get into the 240s. If it gets into the 240s anytime in June or maybe July, I think we've got a new bull market in copper. That's what I'm thinking. Right now, it's just building a base. That's really what it is. Building a base. You know, got building a bear. This is building a base. IYT. Yeah, I'm a little disappointed in the IYT. I wasn't able to spend as much time as I really wanted over the weekend on the transportation index. This is the iShares. I'm looking at this, and I think it's just kind of stuck. So until at 139, until it breaks above into leg C above 140.67, I think it's just going to chop around. So I hope that helps you about the IYT and the XAI. I'll do that when I get back. Basil Chapman, Tiger Technicians Hour. Guys up 117. We'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back, and I'm going to do this. I was actually typing it in, but I didn't even type it in correctly, so to the den. But what about Apple? Apple is trading at 98.95. It had a high on the 26th of May at 100.73. It needs 170.74 to make leg C. So Apple is going to be a bit of a clue on the shorter term because the MACD daily is good. The stochastic's just okay. The weekly charts are lousy, and the monthly charts are just horrible. I must say, I'm still of the opinion that we've made a hat-trick top in Apple at 134.54, and that it is in a mature stage, and it's in a mature stage, just as Netflix is in a mature stage, and it's just digesting all those gains, and Facebook maybe is a little bit better. Facebook, yeah, it's still in a digestive phase, but much better chart, way at the top. It's going to break out very soon. That's different. And Google, I'll still call it Google. Alphabet, give me a break. Not good, down 4 at 718 in a consolidation phase. All three of those have made hat-trick tops. I don't think they participate. That's why the Qs are not as good as they should be. That's why the IBB is only up 2 right now. It should really be up 4 or so. It's at 284. So I hope that helps you just in assessing what I'm looking at here and in relation to what you asked. So a couple of questions here. One was Whole Foods, WFM. Whole Foods trading. Oh, whoa. Now, you see, this could be called an F. I'm prepared here to call it an F/B because it could have a high-level consolidation and then just chug along to the next high, because the MACD is still expanding. Stochastic's way at 95%. The weekly chart has broken out for the first time above all the resistance levels since last September, October. This is fresh territory for Facebook, for Whole Foods. And not only that, I always talk about this. You cannot use local and anecdotal stuff for major market trends. You have to really try to do it as nationally and internationally as possible. But I've been in a couple of Whole Foods around this area, especially the two right next to me, about a mile and a half away. And they are trying every trick in the book. I mean, they are doing differently. The Whole Foods, both of them, they're different sizes, but both of them have completely different layouts in the movable sections now than they were 3 months ago. And 3 months ago, you remember I mentioned it, talking about the time before and going into their Christmas period, November, December, or the holiday period. Remember, I said they do all sorts of things. I think they are working like crazy. They never rest. That's the best thing about them. They've got intense competition. So I like it, and I think that Whole Foods is making a very important cup formation. I would not be surprised that it could test $38 to $39 at $35.21 this summer, and it could do it sooner rather than later. We'll see. I might be wrong, but this is what I'm thinking, that they've turned the corner, at least for now, in the competition. And that's more important than just the profits. I think in terms of the competition, they're there. Even the stock market has, natural foods, etc. There's a lot of competition, and I think they're managing quite well. Now, I still prefer the cakes somewhere else. Those are just too healthy for me. All right, let's get into the nitty-gritties. We've got a moment here, and I think I've covered as many calls and questions as I can. The Dow, trading at 17,921, up 114. Nice action. The MACD and Stochastic are solidly good. I was hoping for a pullback to add to all positions, and we just gapped up today. So that's fine. That's the way the markets are. But the W pattern in the weekly chart is going to be so important, because this week I'd rather talk about what would be poor if it was negative, and negative would be if the Dow closed under 17,750. The close under that would say, oh, it's really struggling. But a close in the 18,000s, going to be fabulous action. All right, Basil Chapman, Tiger Technicians Hour. Check out my opening call. I think you'll find it really interesting and hopefully very profitable. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.